Good evening, everyone, and welcome along to this webinar, which is entitled All That Jitters Is Not Gold. Before we get started with the webinar, I'd like to introduce myself. My name is Chloe Edwards. I'm a trader from London. I'm with Trade with Precision, and this webinar is brought to you by ATFX in association with Trade with Precision. So before we get started, let me give you an opportunity to read through the following disclaimer slide and risk warning from ATFX. So I'll just give you a couple of moments to have a look through that, make sure you agree with everything therein, and then we can get started with the presentation. Feel free to introduce yourselves as well. Let me know that your sound and video are working and that you can see my screen okay, hear my voice okay, etc. So just a couple of moments more to have a look through the next risk warning slide from Trade with Precision. I'll just give you a couple of moments to have a look through this one, and then we can get started with the presentation. All right, so the agenda for today then. We are aware that current market news is coming through with such adjectives as rocky, jittery, and turbulent. But we don't really need to be too concerned about that, because volatile times can still often provide ample trading opportunities for astute traders. And in fact, of course, market volatility is what we as traders make our living from. It's no use trying to trade a market that's not moving. It's markets that are moving that we want to be able to trade. So what we're going to do today is have a live market analysis, and we're looking for trading opportunities across the board. So of course, due to the title of the webinar, we are of course going to be looking at gold, and we'll look at the other metals as well, silver and perhaps a couple of others. And we will look at a couple of other commodity charts. So for example, oil is always a good thing to keep an eye on. And then we're going to look at the Forex market as well. Of course, Forex, a lot of people say Forex is a very, very volatile trading instrument. And of course it is. And again, whatever is volatile, whatever is moving, we can make a profit from, as long as we have a strategy that works in those markets and a risk management plan to go with it as well. So we're going to analyze some major and some minor currency pairs as well. So let me, without further ado, take you over to the charts. I'm going to use the MT4 platform, which is available from ATFX. So bear with me while I get that up. All right, so hopefully you should be able to see my screen okay. I'm hoping the colours are okay for you as well. Please do put a message into the questions box if there is anything that you're struggling to see. I've got a kind of very pale grey background with my bars red and green. That's how I tend to prefer looking at my charts. But if you do want me to change the colours, then please do let me know, and I will of course do so. What I have on my charts is very simply the price action. I'm looking at candlesticks. I always prefer to look at candlesticks in my chart analysis. And I am also looking at some, thanks Rafael for that feedback, also looking at some moving averages here. So many people use many different moving averages depending on what strategy they are trading. I have the 10 moving average at the top there, the black one, the 20 moving average beneath that, the blue one, the 50 moving average beneath that, and the 200 moving average beneath that, the green one. But we're not going to be going too much into strategy today. We're really looking at an overall market analysis to have a look at what's going on in the market. Now, this is gold that I'm looking at here. For those of you not familiar, the symbol for gold is XAU. So I'm looking at XAU versus the US dollar, so the price of gold in US dollars. And this is the daily time frame that I'm looking at here. Up here we can change the time frame, and here it tells us what time frame we're looking at. So this is the daily time frame I'm currently looking at. What I tend to do with my market analysis is I will tend to look at the highest time frames first, and especially with something like gold at the moment, which is in a very nice strong uptrend, what I'm most interested in, or one of the things I'm most interested in, is where could this potentially head towards? And in order to find out where this could potentially head towards, what I need is more information on my screen. So we can see here, we can only get a certain amount of information, in fact, only about 5 years or so of information on a daily time frame. So what I do is I actually go to a monthly time frame, just so that I've got the ability to see my most relevant levels of support and resistance, because support and resistance are crucial for my trading plan. So what I've got here is I've got the monthly time frame, and I can see a level of support over here from all the way back in 2010, 2011, and that is pretty much where price has reached now. Now, just because this level is here doesn't necessarily mean that I can guarantee price is going to do one thing or another. I can't guarantee that price will break this level. I can't guarantee that price will bounce from this level. But what I can start to do is build a picture of what I will do if each scenario happens. So I also need to have a look at the closest level of support. Now, the closest level of potential support, really strong support, is over here. This is where I have seen quite a bit of resistance in the past. And this was back in 2015, 2016 that we saw this resistance. We've also seen it back down to 2013 as well. So that level is pretty relevant to me. However, it's not actually very close to price right now. Bearing in mind this is the monthly time frame, so price is a good almost 2,000 pips away from that right now. So what I need is something a little bit closer. So I'm just going to draw this level here in, and it's not a particularly important or good level, because all I'm basing it on is this touch here. That's just one touch, so it's not a horizontal level, but it just gives me an indication of where price might pull back to if it does start pulling back here, because this level below is a lot further away. So once I've done that on my monthly time frame, I'll go down to the weekly time frame then to see if I can find anything more relevant, or if I can fine-tune any of these levels a little bit better. Actually, I'm pretty happy with where those levels sit. So I'm then going to go down to my daily time frame. This is one of the main time frames that I trade. I trade the daily time frame, and I trade lower time frames as well, 4 hourly time frame. The strategy that I trade can even be used on lower time frames than that, if one has the patience to do so. So having drawn these levels in here, we can actually see that the level that I drew down here has actually become quite relevant on the daily time frame over the last couple of weeks. So we do actually see some support at that level. At the moment, we're not seeing an awful lot of resistance at this higher level, and it's entirely possible that price could actually just break straight through there. If it does, then I will definitely want to look out for a pullback into this level, and I would want that to coincide with my moving averages, which will continue to rise, and I will then be looking for bullish price action. I'll be looking for a small sized green bar, a bullish bar, and then I will be looking to potentially find a long entry into the market there. Quick question here from Rafael. Am I marking support and resistance on the monthly chart to trade on all lower time frames? The answer to that question is support and resistance is not really specific just to one time frame. So especially with the higher time frames, if I have support and or resistance on a monthly time frame, that is still going to be relevant no matter what time frame I'm trading. I could be trading on an hourly time frame, a daily time frame, a 5-minute time frame, and those levels of support and resistance that I drew on the monthly time frame can still be relevant. So the reason that I've gone all the way up to the monthly time frame is because actually price has not been this high since back in 2012. So if I'm just looking at a daily time frame, I just get the last few years of information, that is not enough information to give me relevant support and resistance levels for where price currently is up here. So that's the reason I've had to go all the way back down to the monthly time frame so that I can pick up these support and resistance levels here, because these are the ones that are, not very straight line. These are the ones that are most relevant to where price currently is. Hopefully that makes sense. So on this occasion, I've had to go up to a monthly time frame just to find a support or resistance level that is relevant to current price action. Usually I wouldn't necessarily have to go up to the monthly time frame, but it is very useful, or it can be very useful, to pick out strong levels of support and resistance on a monthly time frame and a weekly time frame, because those can still be relevant on the lower time frames as well. Thank you very much for the question, by the way, because I can guarantee if you have any questions in your mind, the answers, if I can answer them, those answers are bound to be useful to other people listening in as well. So we really, really do appreciate you. I love to keep these sessions as interactive as possible, and really do appreciate you asking questions. So where does that leave us right now? Well, we are in an uptrend on gold, and by uptrend, my definition of an uptrend is higher lows and higher highs. So higher lows all the way through here, higher lows, higher lows. All of those are higher lows, and then higher highs all the way through here. So as long as I continue to see higher lows and higher highs, I will continue to look for long opportunities on gold. So if price gets through this level and comes back down to pull back and come back into this zone, as I said, with these moving averages around about this level, then I will be looking for a long opportunity. Now, as I said, if we just go back one more time to the monthly time frame, this level that I've drawn in here, this is a pretty significant level here. This level acted as support for the best part of a year. This level acted as support. So it is, in fact, more than a year, probably 2 or more years over to here. So this is relevant, and price therefore could bounce at this level and move back down. So we have to look at that as another possibility. So where does that leave me with my trading? Well, I'm still going to trade what I see. What I see right now on the daily time frame is higher lows and higher highs, and therefore I'm still going to trade that. The only way my bias will change will be if price comes down and gives me a lower low below this point here, and then a lower high. If I get a lower high and a lower low, then I will no longer be looking to trade this long until such a time as that changes again back to a higher high and a higher low. So I'm always trading with what I currently see right now. At the moment, I'm going to be looking for long opportunities only on gold still. Now we can go down the time frames and look for these opportunities on the lower time frames, and the 4-hourly time frame is a really nice place to start. We still see good cyclicity here. I'm still seeing higher lows and higher highs. So all I need to do is wait for another pullback again into this zone of the moving averages here, and then potentially a long opportunity there. So that's gold. I'm going to have a look at silver as well, because silver has been trending really, really nicely also. And a lot of people focus on gold as if it is the only precious metal to trade, and that's not the case at all. Of course, gold is a really, really nice thing to trade. I really like to trade gold, but there are plenty of opportunities to be had on other precious metals as well, and silver is no exception. It tends to track quite often very well with gold. So while gold is in an uptrend, we might tend to see that silver will be in an uptrend as well. So let's go up to the monthly time frame on silver. This looks very different from what we saw on gold, because price hasn't rallied nearly as much. On gold, we've got price, you know, almost to the highs or heading well towards the highs of 2010. Silver, we're still pretty close to I wouldn't say the lows. We've obviously been much, much lower, but we haven't moved far from the recent lows, you know, that we set in 2014. So what we've got here on the monthly time frame is we have got, let's mark in our levels of support and resistance. So we have a potential level of resistance here. I'm basing that on this high over here and this high over here. So that could come into play. Past that point, we do actually have quite a nice long run until the next previous high over here. And the levels of support that are really most relevant to me at the moment are really, for me, it's around about here. It's quite difficult to draw an exact pinpoint level of support there, because we don't have really so many exact touches of this level, but that's the level that I'm going to draw as most relevant to me right now on the monthly time frame. Going down to the weekly time frame, we can probably fine-tune that a little bit by looking at the touches over here, and we can see here that price has moved up and down through this level quite a lot, but we also do see quite a lot of touches of this level here. So it is a relevant level. I am going to use that as my relevant level of potential support if price does come down to pull back. However, the next level of resistance is a little way away. We've got quite a nice amount of space to continue to trade long up to that next level of resistance. Now, it won't necessarily move long all in one direction. It may move with cyclicity. We can anticipate it moving with cyclicity, but that's the next major level of resistance that I'm looking out for. Therefore, on the daily time frame, again, what I'm looking for is I'm looking for a pullback into the moving averages so that I can then look for bullish price action. So I want to see a green bar of some sort. I want it to be a small to medium-sized bar, and then I'll be looking for a long opportunity up to that next level. Yes, good point actually. A lot of people do find it easier to mark support and resistance on a line chart. I don't tend to do that. I don't very often tend to switch from candlestick charts. That is just my habit. But we can of course take a look at that if you would like. So we've got a line chart here. The line chart is in green, and it does actually help to mark in those levels of support and resistance sometimes. So we can see, hopefully you guys can see that we've got the line chart here, And again, we can see touches at this level over here, not quite a touch there, but we've got touch there, touches over here. So yes, if your preference is to mark support and resistance on a line chart, then by all means use whichever method works for you, whichever way you can see the support and resistance most clearly. Please do use that method. So for me, silver is in an uptrend also, and I will continue to be looking for long opportunities until this next potential level of resistance, possibly even further. You know, we can't predict really when exactly this is going to turn around, but if we look at the monthly time frame here, if price gets up to here, it can do one of two things. It can break through, or it can turn around and come back down. Either way, we can be ready to take advantage of that. If it breaks through, then I'll be heading to this next level. If it breaks through that, then a level just slightly higher up there. And if it breaks through that, then I could potentially even be aiming all the way up there. So of course that is jumping way ahead of where I need to be trading on the daily time frame, but those are the kinds of things that we can start to look out for. So the next level I'm heading for is around 20.80. But once price hits that level, then I will make, or if price hits that level, then I will make a decision based on what's currently happening with price action. So if price hits that level and pulls back and gives me a new entry opportunity, I may still choose to trade that in anticipation of potentially seeing price break through there. As long as I'm trading safely with a good enough reward to risk to trade up to that level and at least take some profit off before the level, then I'm okay to anticipate that further move to the upside. But if price hits that level, comes down and then gives us a lower high and lower low, then I might start trading short on the lower time frames depending on what I see there. So again, I'm going to be looking at the lower time frames for entry opportunities. And what I'm always looking for is price to retrace into my moving average buy zone there, and then I'll be looking out for long opportunities. So again, on this hourly time frame, I need to continue to see cyclicity, so I need to see a higher high above that point, then I'll be looking for a retracement and a potential long opportunity. So gold and silver, still bullish on both of those. Let's have a look at Palladium just briefly. Again, going to the monthly time frame, we've got a really nice strong uptrend here on Palladium, and it does continue. A lot of people may have, let me just remove these levels. A lot of people tend to, when they see something strongly trending, they tend to do one of two things. Either wait for the trend to be almost over before jumping in. Of course, we don't want to be doing that. But the other thing people tend to do is say, well, this trend has gone on a really long time. It must be about to turn around. And they stop trading it. Well, what I only do is I only trade what I see. And so for all of this time where we saw a really, really nice strong uptrend, higher lows, higher highs, all the way up here, higher lows, higher highs, really, really nice, strong uptrend. All of that time, all I'm doing is looking for long opportunities. And you can see every time price has pulled back into the buy zone here between these moving averages, we have seen opportunities to trade long. Pretty much every single time that has happened. So I will continue to trade long until I see a change. And that change came here because we had a lower low followed by a lower high. That was my indication to stop trading on Palladium. Then we had a lack of clarity in this zone here. I didn't really have trend in any direction. It wasn't trending up, it wasn't trending down, it was just a bit all over the place. Then at this point here, I started to see higher low and higher high. So that's the indication for me that I might want to start thinking about trading long. It just so happens there weren't any long opportunities on the daily time frame for me here, but during this period of time, it's a couple of months still, there were opportunities on the lower time frame. So I'm in the same position now. I have got a higher low here, and I've got a higher high. Wherever this high ends up being, it's higher than this one over here. So I've got a higher low and a higher high. I've got my uptrend, and I'm going to be trading long on this for as long as I continue to see higher lows and higher highs. On the daily time frame, I'll be waiting for a pullback into my moving averages. On the lower time frames, I also have to wait for a pullback into my moving averages. We can see there was one just here where we got a nice bullish bar here, and that had pulled back into the moving averages. The problem with that bar was it wasn't a particularly small bar. I'm usually looking for a small sized bar in the moving average buy zone. So what I'll be looking for now, again, we've had a higher high. I'll be looking for a pullback and a small sized buyer bar in order to take a long opportunity there. The last precious metal I'm going to look at is platinum. And we've got the same thing happening where we've had a rally over the last couple of weeks or so. It's probably the least clear cut out of all of them, actually. It's probably the least bullish, certainly in terms of the monthly time frame, but that doesn't mean to say that it is any less worthwhile trading. I would say there is a clear level of resistance just here, and we've got some space to trade up to that level. So looking back down to the daily time frame, if price pulls down from here, then I'll be trading up to that level. If price continues up to that level, then it will depend on what happens at that point. If it comes down and still continues to show me higher lows, then I may consider trading up to that level as long as I have a good reward to risk up to that level in anticipation of it potentially breaking, because this is a commodity that certainly isn't overextended if we look at the monthly time frame. This has not really been running upwards for a very long time. If we compare it to, for example, the length of this run here from back in 2008, or this run to the downside from back in 2013, 2014, 2015, there is the potential for these to give really, really long trends once those trends really get underway. So the potential for this to break through this level and then carry on almost indefinitely, certainly to this next level here, possibly even up here. So if I can get into a trade down here, scale out of the position so my position's safe, and then run the rest of the trade through, then there could be a very, very high reward to risk opportunity there for me. So that's something that I want to be able to consider, and that I feel is perhaps even more likely on platinum than, for example, on gold, because on gold we've already been running for quite some time here, and there's certainly less room to the upside. To the all-time highs, to this level of resistance up here, I mean, there is plenty of space, don't get me wrong, there is plenty of profit to be made out of trading long between these two areas. But if you compare it to what we've got on platinum, it's not nearly as much space. If you imagine platinum could get back up to those all-time highs as well, even down to this level here, then that would be an unbelievable reward to risk there. So definitely worth keeping an eye across all the metals, not just gold. I know gold is the favorite for a lot of people to trade, but I always like to keep an eye on all of them to make sure that I'm not missing out on something. So with the precious metals covered, I am going to now just have a look at oil. So I'm going to be looking at the US WTI spot oil, which is this one, the top out of the two oil options. Monthly time frame, not really giving me an awful lot of direction at the moment. I would say oil has been a little bit more tricky to trade over the last, I mean, really most of this year actually, so far. Compared to last year, it really hasn't been so easy to trade. We haven't had such an established trend direction on oil this year. On the daily time frame, it is possible to pick up trends occasionally, but at the moment, we just really have price ranging. It's not really making higher highs and higher lows or lower highs and lower lows. It's actually kind of making lower highs and still higher lows. So we've got a bit of consolidation going on here. I would say for me, at the very least, I need to start seeing higher lows and higher highs, or lower lows and lower highs on the daily time frame. That's what I need to see in order to start trading. The Brent oil is giving us a fairly similar picture right now. It's a little bit clearer to me because I've got a more established zone between which price is ranging. So I've got this zone here, the highs where price is being held below, the lows that price is being held above, and price is really just bouncing in this zone currently. If we look at where we are on the monthly time frame, I would say I'm more bearish on this one. If we look at the weekly time frame, we can see why, which is that we have got lower highs and lower lows. So what I would love to see right now is I would love to see some kind of indication on the daily time frame that price is going to resume a downtrend. That's what would be my preferred option here. I'm not saying it definitely is going to happen, but if it does happen, if I do get an indication on the daily time frame, which means I need to see a lower high and a lower low, then I'll be looking to trade short, especially if price gets below this level here. If price can get below that level there, all I'll be looking for will be a retracement up to this point here, and then I'll be looking to short that market. All right, so we've had a look at the precious metals, we've had a look at oil. Let's now move to the currency pairs because, as I mentioned before, we do get a lot of volatility on currencies, and that is where some good money can quite often be made. So let's have a start off with the major currency pairs, and we'll start off with euro dollar. Now, this might not look as clean, I suppose, to some people, but for me, again, it is always just a case of analysing the highs and lows. And here I have still got lower highs and lower lows. I'm in a downtrend here on euro dollar. Therefore, I'm looking for short opportunities. So price currently is pulling back up towards the moving average zone here. So I'm going to be looking on this daily time frame for bearish price action. So some kind of bearish candle here, a small sized bearish candle, and I'll be looking for short opportunities. The other thing I can do, of course, is go down to lower time frames. Now, I really like where price has pulled back to here because just about exactly where price currently is. We've got that previous low level there, and I really like taking trades where they've pulled back to previous lows or previous highs. So there's a potential that this could return to the downside at this point here, in which case we would perhaps even miss a daily trade because price hasn't yet pulled back quite into those moving averages, but it might be possible to catch a trade on a lower time frame instead. All we need to see here is perhaps cyclicity returning to the downside on the 4-hourly time frame or the hourly time frame, and then I could look for short opportunities there. So again, euro dollar is something that I am looking still for short opportunities. Just for completeness, I am going to go to the monthly time frame just to demonstrate really how useful it is to have a look at the monthly time frame for levels of support and resistance. That's where we can see this level here. We can see it on the weekly time frame as well, actually, but this level here, let me just delete that one. This level here that I've just drawn in, this was a pretty strong level of resistance, and it was respected for quite some time back in 2015, pretty much the whole of 2015. In fact, all of 2015 price was below this level, and we actually had price ranging on the euro because we had a low level down here as well that price was being held up by. Now, at the point at which price broke up through that level, we then had an uptrend. We had an uptrend here anyway on the lower time frames, but breaking through this level, that then gave us much less limited scope for returns in that uptrend because we weren't just trading up to the top of the range, we were actually freely trading up throughout the uptrend. Now, once price started coming back down to that level, we found it as a level of support again, and then price broke down back into that level, resistance here, and now price has been moving down ever since. So having an idea of this level on the monthly time frame has really given me a map, if you like, for my trading on euro dollar, because now I can't guarantee that price is going to get down to this level. But what I can say is that if I continue to find short setups according to my strategy, I'm going to happily continue trading those until price gets down to this level at least. So really, we're only halfway there. If we look at where we've come from breaking down into this level again, we're about halfway now down towards that bottom point. So I've still got half of the downtrend left to trade. Weekly time frame looks nice and bearish. So daily time frame, really, I'm going to continue to trade this short until I see a reason not to. And my ultimate aim is to trade all the way down to this level. It's around 1.0514, something like that, around about those lows down there. I will be a bit more conservative than that, so I would probably really only be targeting around 1.0560, probably something like that. But of course I will monitor price action on its way down to that point. But at the moment, my bias is definitely short on euro dollar, and I'm going to continue looking for short opportunities until it gets down to these levels, if it does head down there. Now, of course, we could start to see price giving higher lows and higher highs. You know, I can't guarantee that's not going to happen, in which case I will trade according to that. But it's always according to the highs and lows that I see. Right now, I'm seeing lower highs and lower lows, so I'll be trading down to according to those lower highs and lower lows, and there's no technical reason for me to change that bias that I have, because the next level of support is all the way down here. So the only thing that will make me change that bias is actually seeing higher lows and higher highs. Let's move on then to some of the other currency pairs. We've got a downtrend at the moment on dollar yen, US dollar, Japanese yen. It's not quite so clear cut on the daily time frame. We have a range on the daily time frame. If we look at the monthly time frame as well, it's not quite so clear cut because we've got this level of support down here. This level of support, it was resistance back in 2013. It has been support in 2017, 2018 and 2019. So the fact that price has now reached down to that level again, that is the reason that I'm seeing that price is consolidating and ranging a little bit rather than trading in a nice strong direction. So if price breaks through there, obviously I will be very bearish, trading down to around that point there. If it bounces, then really I envisage, let me get the, this is the next strong level of resistance here. So if we get a bounce at this low level here, 105.07-ish, then I see price potentially coming all the way back up to 113.88 or thereabouts. So again, these horizontal levels just are giving me a map, giving me areas between which I can potentially trade. So we can see that nice and cleanly and clearly on the weekly time frame there. We can see this level of support just setting in now, which is why we're struggling a little bit on the daily time frame. And we can also see the potential. So let me mark that in there. There's a level of support down there. If price breaks through, I'll be looking to trade down to that level. If price bounces, I'll be looking to trade up to that level. Obviously, it will not trade in a straight line like I've drawn. It is likely to cycle, possibly even quite messily, but of course that is all part and parcel of trading. Let's look at cable now. Cable, pound against the US dollar. We have got a lot of political turmoil going on in the UK at the moment, and I'm not even going to bring my knowledge or opinion on Brexit into this. We would need a whole other webinar to discuss that. So all I'm going to do is talk technically about the pound and technically about the pound against the US dollar. And technically, we have got a level of support down here. We have got a level of resistance up here. Those are the two most relevant levels to me at the moment on cable. Let's just see. We don't have any more. Let me just get rid of some of these. Don't have any more information to us available on this particular chart. So those are the relevant levels that I see. Now, we have been in a downtrend on cable. We've been in a really nice downtrend, actually. So it has been perfectly possible to make money on this trading short. Now, that would be whether you have a political bias or not, but just looking at the technicals on this chart, we have got lower highs and lower lows. So just looking at the technicals there, we have had a downtrend. Right now, we've hit this low level here. Price has not been below this level for a very, very, very long time. So it makes sense that we would find some support at this level. We also then see a higher high here, along with finding this as a level of support. So right now, my downtrend is no longer intact. what I need to wait for is a decision in the market. Now, it's entirely possible, bearing in mind the political turmoil that we find ourselves in, it's entirely possible that that level could break, in which case it could almost be free fall for the pound, and I want to be ready for that. So if I can find a way into the market before that level so that I could scale out at that level, make my trade safe, make it a guaranteed break-even position in case price breaks through there, then that would be a really, really nice thing to do. But at the moment, I have to trade with what I see, which is this level of support here and this higher high here. So until I see a lower high, then I'm not particularly interested in trading this short. Now, the other thing that could happen is we could miraculously have some kind of positive news for the UK, in which case this could continue up, make a higher high, and we could head back up to this level here, in which case there may be long opportunities that we can look out for on these slightly lower time frames. We've got all of the moving averages on the 4-hourly, for example. They're pretty much moving sideways at the moment, and they're pretty close together. So it wouldn't take much for everything to swap around and for us to start seeing an uptrend here on the 4-hourly, which would be tradable up to at least that level there. So that's something worth bearing in mind here if you are someone who wants to get your hands dirty with trading cable at the moment. Other major currencies to look at, we've got dollar Swiss. Now, dollar Swiss, a lot of people can tend to find quite messy, quite choppy. I do actually find dollar Swiss can be quite choppy, but I never rule out trading the Swiss cross pairs because, for example, Euro Swiss, some of my best trading recently has been on Euro Swiss. It has been trending so beautifully, and I have been continuing to trade it short. We have had short opportunities pretty much every time price has pulled back into these moving averages here. There have been further short opportunities, one just a couple of days ago there, and still heading to the downside. Now, I know a lot of traders who are saying, well, this has gone far enough, it must retrace. And even at this point down here, we put in a slightly higher low there. And so a lot of people at that point were saying, this downtrend is over, we're not trading it anymore. But for me, just because we've got a higher low here doesn't mean so much, because we don't actually really have a strong higher high. What we've got is a level of resistance forming here. Now, if that level of resistance holds, then really all we've got is a strong downtrend, an area of consolidation, which is perfectly normal even in trending markets, followed by a resumption of that strong downtrend. So Euro Swiss has been something that I know out of habit, a lot of traders don't particularly like to trade Euro Swiss, really based on, and this is really talking about people who've been trading for a long time. If we look at what happened, let's see the time frame that demonstrates this best. What happened here, Euro Swiss was rubbish for trading around here. There was almost no money to be made there. This is an example of a lack of volatility. So a lack of volatility can give us a lack of trading opportunities. We want the instrument to be volatile and move in order that we can make money from it. And because of that habit there, where we really had price moving sideways for what was it, 3 years or something, a lot of traders just put Euro Swiss out of their mind for trading. They knocked it off of their watch list completely. Once this happened here, which was the Swiss National Bank unpegging the Swiss franc from the euro, we had that huge move down there. And after that, we had another period of fairly fairly uninteresting movement, really. We didn't have any sustained trends, especially in this period here. We had another period of a strong lack of volatility. However, once we started to see trend, because of this strong move here, there was no what's the word I'm looking for? There was no levels of support and resistance evident, because we just had this strong drop over here. So once price managed to break through this level of resistance here, the next level of resistance was up here, and that is indeed where price eventually traded to over the next period of time. And now we see price coming down, really back down to those levels of support. So the Swiss pairs, and especially Euro-Swiss, a lot of the Swiss pairs actually, they respect the horizontal levels of support and resistance so nicely, so cleanly, that we can expect reaction around those levels. They're really such nice, strong levels. We can see here resistance here turned into support over here, resistance here turned into support here. It may turn into support again here, and then we've got support over here, may turn into support further down here, etc. So definitely worth looking at those horizontal levels on Euro Swiss as well. And really my take on this is, and because I've been trading Euro Swiss all the way down here, I've made a decent amount of profit. The position I'm still in, I've already scaled out of, so that's a break-even position no matter what. In fact, I've been trailing my stop as well, so it's a profitable position no matter what. All of the subsequent positions that I have since scaled in with, these as examples, I'm trading down to this level, seeing that it's a level of support. However, if that level breaks, not only am I in several profitable positions still, but I'm also in several break-even positions, which if that level breaks, I could stand to make even more profit. My suggestion or my plan is to just keep an eye on this level. If it does break, I'm definitely going to want to look for short opportunities around there if we get a pullback into this zone, which we may well do. So that is my plan for future opportunities. Now, if price bounces at this level here, that presents more of a problem for me, because that is a level of support based on price action from back in 2017. In fact, back in 2016, 2015, we've got a level of support, we've got a level of resistance as well over here. This level is definitely very, very relevant. All of this support, all of this resistance. So if price now bounces at this level, then I'm not intending to get into a short trade at that point. So if price comes up here, I won't be intending to get into a short trade. We may see price come further up. But if price continues down, then I'll definitely be looking for a short opportunity below that horizontal level. So that's pretty much all that we've got time to look at on the currencies, on the markets for today. Let me just briefly take you back to the presentation. And we will just finish off with a little bit of info about ATFX as a broker. They are the winner of Online Personal Wealth Awards 2018. That was just last year. They are regulated by the Financial Conduct Authority. They have an efficient, secure, easy-to-use payment portal. They are committed to providing competitive prices for their clients. They use MT4, which is global investors' most widely used trading platform. We've had a very brief look just now, I haven't really gone into any functionality on MT4, but we have done webinars in the past with functionality on MT4, and I'm sure we will do so in the future as well if you want to learn more about MT4. And they have a bespoke customer service and trade support for all client trading needs, 24 hours a day, 5 days a week. So they really are a fantastic broker. You can open a live account with them. These are the contact details that you will need. The postal address is just there. There are phone numbers if you want to speak to someone directly over the phone. The phone lines are open 9 AM to 5 PM. And those are the phone numbers there for you. And of course, they've got a fantastic customer service team available on the email as well. And there are a couple of email addresses for you to contact there as well. So we will leave it there for this evening. Thank you very much for being with me. It has been an absolute pleasure. I really do hope to speak to you all at some point in the near future. We do these webinars from time to time on a regular basis, in fact. So please do keep an eye on the website or email the customer support team if you want any or you want to be registered for any further educational webinars or market analysis webinars. That is exactly what we're here for. So thank you very much for listening in. Fantastic. Thank you for the feedback as well, Rafael. Absolute pleasure to have you in, and thank you for your contributions as well and your questions. Very, very much appreciated, and I do hope to speak to you soon. Have a lovely evening, everyone.